Um, it's been about 3 years since I stopped all of that. I was the managing director for transaction banking at Standard Chartered Bank for about 7 years, and then before that I was with Citi, and I've done quite a few roles. And so there was a lot of reference to what is banking, and Kamal basically talked about rewiring, and so did Hilda. And interestingly, because of the field I've decided to go into, I basically have actually met them and a few other people. So everybody referred to rewiring the DNA in banking, and then we're asking, what is rewiring the DNA in banking? And Standard Chartered Bank basically did ask ourselves and say, what do customers really want from a bank? And I guess whenever we refer to banks, we have a very static view of what the bank is. But I just want to put it to you that banks are also evolving. So whenever you mention a bank, you should also take into account the fact that we are in this world, we are experiencing technology, and we are seeing technology applications in different industries, and we're feeling the impact of that. In terms of, some customers don't find a previous service we used to have as relevant as it used to be. Some new players are coming in, like Little, who knew that a taxi cab could be a bank. We have Pesesha sort of also providing finance to different sectors of the economy that would have targeted or that we actually had ignored because we were quite comfortable in our space. So I'll just, let's hope my technology doesn't fail me right now. I'm trying to move this. Yes, that's it. This is my major slide, because we asked ourselves critical questions in terms of what do the customers want, and how can we be relevant, and how do we continue to be relevant, and what are advantages do we bring to the marketplace such that we have a competitive advantage versus those who want to come into the industry. Should we be a VC company? Should we give up on banking and just start investing in fintechs because that is the future? Should we help our clients digitalize so that whatever industry they're in, we help them using our capital and financing capabilities to help them digitize and then discover their own financial journey and create it and build it for themselves? Or should we just build totally new ventures altogether, and start afresh, clean the board and start afresh? Our view at Stanchart is that it's all of these things, because life is an evolution, society is an evolution, and you cannot exactly, I think sometimes it's unfair to ask my colleague from the banking sector and say, what are you going to be? And I think, it's like any of you asking your child when they are grown and say, how tall are you going to be? How fat will you be when you grow up? What you can do to influence that process is to say you need to eat healthy, you need to exercise, you need to do all the right things, you need to keep out of, stay away from unhealthy drugs so that you can be what you need to be. And then the rest will leave to opportunity and happenstance. So basically, we formed SC Ventures, which I manage for Africa. We don't actually use titles. It's a very painful point when I go into meetings with MDs and CEOs flashing their cards. And we've actually told ourselves we don't flash our cards. So I'll give you my card with my name, and that is it. Because our institution basically believes that, what you do should speak for you. You should become your own brand. You should not rely on an organization chart to gain relevance. Your relevance should be what do you bring to the table. And so we have a very flat structure. None of the people that I hired report to me directly. Of course, for management and HR purposes, we do that. So what we did, let's start from where we are. So we have an accelerator unit. The accelerator unit basically focuses on what we know. What have been our experiences with our clients? And where have we seen changes in behavior or dissatisfaction in service. So I run a lab where we actually do what we call co-creation with clients. And then we also use our staff as a source of information and a source of what's the next mountain we should climb. And so we call these entrepreneurs. So basically, any employee who has a bright idea, to organize the process, we actually issue what we call challenges within the bank. So we say, this is a good problem to solve, and this is a good problem that we need to solve, and how are we going to solve it? So we don't start with an end result, we start with a problem. And then we see who are the players in this space. And sometimes we find that the solution is outside ourselves. So the solutions could be with an entity like Possession, since I've just seen Hilda after a long time. Or the solution could be with Graph Silicon, or it could be with Cellulant, or it could be with any other party in the market. I'm using names that I'm just seeing right now, not that there's any transaction going with them, or that there is none. But we see who is giving us a solution that could help us access to market, who is nearer to the customer, and we can adapt and cooperate with. And so we get a stream of work from there. From that process, sometimes we find players that are very interesting solution, a solution that's not only good for ourselves, but good for the market. And so then the next phase that we do then is we look at the possibility of investing in them. And we have quite a portfolio globally. I'll talk about public ones. There are quite a few which are still in the kitchen, but then we have a few public ones, like we've invested in Instabase, we've invested in Silent8, we've invested in Assembly Payments globally, and there are quite a few companies that we've invested in globally. And I'm happy to say that we have actually, the market value of our portfolio, despite the current situation globally, is still higher than the cost that we've invested in these entities. We also look at, and for the African continent, of course, we started 1 year after we launched in Singapore, so I was the first unit to open outside. And some of you may actually have met me before, and I went off the scene for about a year. I wasn't sleeping. I said I had introduced myself to the world, and I needed now to get busy and build something tangible. So that's how we identify the fintechs that we deal with, and then we invest in. Now, there are some problems that we come across that we feel that we cannot find a fit-for-purpose fintech, or we can't adapt our internal processes in order to meet that industry need. So in that case, we then start new ventures. One venture that we have announced, you might have seen it in the press, is our B2B marketplace, which we have launched in Kenya. We have actually got a CEO, and we're expanding across Africa. We've got quite a few entities. We have another 3 or 4 ventures we were likely to announce by the end of the year. These are totally new entities that will have their own board structure, their own CEOs, and deploy technology and use lean startup methodology. So when I've heard comments like, will banks become fintechs? Yes, in that regard we do, and some of them are not licensed or don't need a kind of license. So let me see the next slide that I would see. What do you, now it's kind of small, I'll hope I can see from here, otherwise I will speak from memory, when starting a fintech, a lot of what we've come across as we've been meeting quite a few fintechs is some of them are, sometimes people see them as a quick get-rich-quick methodology in terms of, we've heard that, some Nigerian guys were in a garage and then they started a payment company and then they got $40-50 million from a foreign investor. Maybe I can use that as a route to get money. And so you're looking for a quick reach methodology, or they tried to just set up a lending platform that doesn't really understand that industry and get into greater detail. So you have these lending platforms, and then because the risk structure around those platforms is not well designed, you find that it's very expensive because, if you've not curated your risk and credit risk taking up capabilities, you will have to cover up that risk by price. But then at the end of the day, then you don't give the credit to the people that need them, because the guys who are paying are actually paying for the poor borrowing behaviors from the others, And then I've heard a lot of times people talk about, we've got a great idea, but compliance. We've got a great idea, but regulations. And we believe that as an institution that has traditionally been, from a banking side, regulated, there is a purpose for regulation. The regulation is there to protect society. And if you don't embed controls into your product, which you are digitizing, then if you don't embed those controls, then your product is not complete. Because then you will not be able to address challenges when that product comes across some challenges. So you need to embed risk mitigation into your product, and that is what we believe. So when the fintechs that we have met and are working with, we've actually worked with them in terms of, what is your approach to risk? Risk should not be avoided. Risk should be managed and designed into the product set. And so one of the areas that we think we provide support to fintechs, and I've spoken to quite a few. Some of them have worked with us for a short while and went away. Others have come back to us. We believe that where, for instance, we have not had an agreement on managing their platforms and managing the risk profile, that at least they have learned or been able to take a cue from some of the issues we've pointed out in terms of how does it support their product fee. And then there's also the implementation methodology. Sometimes not enough time is spent in designing and making the product fit for purpose. You might need to give me a cue in terms of time in case I roll over. Using an agile methodology, one of the advantages that the fintechs have is the ability to start on a small scale. If you're running a $10 billion portfolio or $50 billion portfolio, it's very, very difficult to just change your entire processes immediately because you're risking so much capital. But if you're looking at something that's going to be about $1 million or $500,000, you can afford to take some risk, and therefore you can afford to try and test your product. And you should use the opportunity at the beginning to really achieve and identify product market fit. And some of the fintechs that we have met have not really spent that time in identifying product market fit and are really looking at design the product, identify a problem, and scale. And that really does make fintech sometimes not investable. And you might know that, everybody knows about the 10% of fintechs that succeed, but very few people know the 90% of the fintechs that start and fail because of inability to achieve product market fit, to test it, and to see whether people can actually pay for the product. And so our approach, therefore, if I'm going to, because I've got about 15 minutes, and I don't know how much time I have left, but our process, therefore, is to use the skills we have as a bank, in my earlier slide, to identify customer challenges. We have been servicing them. Identify fintechs that are in these spaces and see how we can collaborate with them. Invest in those fintechs that are solving a real problem and actually looking at addressing the compliance risks and the operational risk around that particular product. And then eventually building new ventures that I'm sure that we will be announcing across Africa over the next few years. So I think I'll leave. I've got about 5 minutes left, so I I'll be open to questions if anybody wants to ask a question in terms of our approach to rewiring our structure. I've either been very articulate or I have not said anything at all. Okay, then I'll just round off. If you see there in terms of beware, I'll just reiterate them. You know, fintechs are not get rich quick schemes. So do not get into it if you don't think you have the energy and you have the desire to spend a lot of time refining your product for the market. You know, ideas, you know, are just the first step, but they're complex. Every time you have an idea, when you start implementing it, it becomes extremely more complex. Design risk and controls into your processes, and then do a lot of product testing to make sure that there's a product market fit. And then exhaust sweat capital. I don't think I've spoken to this issue a lot or earlier, but a lot of fintechs that are starting that have not yet established product market fit want to go to market or want to raise capital or come to me and say, can you please fund this particular idea? Now, two things will happen, and this is a complaint I've heard in this market, where a large company sees a great idea, sees that you have not exhausted the value that you could have built, and take that idea cheaply. And then they're able then to scale it. There have been quite a few complaints around that in terms of, I had an idea, I presented it to this VC, and then they then either they didn't build it or they just took the idea and built it. Use your sweat capital usefully, because we all know that the centers of capital are London, New York, San Francisco, etc. And that's where a lot of capital is. And that capital is hungry for investment opportunities. And if you have a solution that solves a major societal problem, it could gain value immediately. But then don't be in a hurry to sell that idea. Invest in it. Put your sweat capital in it until you're sure you've optimized the value that you can achieve. And therefore, you only ask for external capital when you actually need it. In that way, you'll have optimized your idea, you have gained, also learned a lot from the market, and make it get a better premium for your price. So thank you very much.